I'm not quite sure. But look, the bottom line is that there will be a big bank failure, a PNC or a Truist or a U.S. Bank or one of these banks, and they'll bail them in. And when that happens, I think you'll see chaos and panic, unlike anything any of us have ever seen, because it was bad enough and scary enough when the banks were bailed out, as they should not have been. Read the Dodd-Frank law. That was not how it should have gone down. And
welcome to this insightful video with Andy Schectman CEO, Miles Franklin. In this discussion, Andy dives into a critical topic that's been on his radar, the potential for a major bank failure and its repercussions. He sheds light on the looming possibility of a bank bail-in and the ensuing chaos it could unleash. And he also talks about gold and silver. Join us as we delve into this thought-provoking conversation about the future of the banking industry and its implications for all of us. Let's get back to Andy.
My officer was a Sing Sing correctional officer. And he said to me, and he said to the class, here's the deal. If you use your gun, you pull it out to kill someone, period. You never pull it out and wave it around and say, I have a gun, back up. You pull it out after you have exhausted every single opportunity to flee. And if you can't flee and you can prove that in a court of law, then you pull out your gun and you use it to save your life or someone else's life who you're with. Period. And you are held to a much, much higher standard. And you think real hard about that as someone who carries a gun or owns a precious metals company. And what's going to happen if I do that? Well, you're going to get arrested. That's number one, that they said. You are going to go to jail no matter what. That's what the gentleman who taught the class said. You will be arrested no matter what. You will go to jail. You have to be able to prove that you exhausted every opportunity to flee. And that's what it's for. It's not for any other reason but last resort. And I think it's deplorable that that would be considered a solution to a problem that, has nothing to do with lawfully owning and via permit a gun. Yeah, look, the national debt right now is up almost really darn close to $2 trillion since they raised the debt ceiling. And, it took almost 210 years to spend our first or to go into debt for our first $2 trillion. And we did it in, a few months. This is reaching a pace of stupidity, and it's going to begin to really affect the banks as well, I think, as rates continue to rise. And look, I think higher rates are going to become a self-fulfilling prophecy because a lot of these holders, this is what we're seeing continually, are switching their 1% or less yielding bank accounts to T-bills and that are yielding 5%. And that's why the banks have to sell their loss-making, long-duration treasuries just to be able to pay those deposits that are being withdrawn. And this will force constantly higher interest rates for those long-term treasuries, and thus much larger losses on the treasuries or these unrealized gains. The whole banking system will get obliterated. And if you look at what's happening, just last week, we saw on a seasonally adjusted basis that bank deposits plunged by another 70 billion just last week. And so even more concerning is that in 6 months' time, and this is mostly to the smaller banks in the United States, they need to find $108 billion, these banks, because the bank bailout funding program has to be paid back in 6 months. And so there is going to be a lot more in the way of fireworks with the banks. You're seeing money just flee out of the banks, but maybe even more leaving not only the reverse repo market, which all of the money market funds are going into from the regional banks, going into the commercial banks, into their money market programs, which are being allowed to invest in the overnight repo market, which they shouldn't be allowed to do. The Fed should have stopped that a long time ago. It really would have put a brake on the exodus out of the regional banks, because as we've said before, you get 1% or maybe 0.5% in a savings account in a regional bank with the ability to go to a commercial bank that's too big to fail, paying 5.5% in the money market with daily liquidity. Why would you stay in a regional bank? The best rate you can get in a regional bank carries a 1-year CD at under 5%, locked in for a year. No reason to stay there. but all the money leaving the commercial banks going directly to the Treasury and even draining down the overnight reverse repo market, the money in there pulling out, going directly to the Treasury because they're paying a higher rate than the 5.3% or thereabouts you're getting in the overnight repo market. You can get more than that in a 3-month Treasury. And, it's crazy because at the beginning of 2022, that 3-month Treasury was 0.06%, and now it's 5.5%, which is more than the overnight reverse repo market. It is draining the reserves from the banks, and it's a big deal. I truly believe it will be the catalyst for whatever comes next, and keep an eye on it. The end of the last chapter in the story of this banking crisis is far from being over. So, yeah, that's what I will stick to. It's going to be the catalyst for the next problem, and it's going to start right there with rates rising and money leaving the banks, making rates rise higher, which puts more pressure on the banks, and it's just going to obliterate the whole system. I'm not quite sure. But look, the bottom line is that there will be a big bank failure, a PNC or a Truist or a U.S. Bank or one of these banks, and they'll bail them in. And when that happens, I think you'll see chaos and panic, unlike anything any of us have ever seen, because it was bad enough and scary enough when the banks were bailed out, as they should not have been. Read the Dodd-Frank law. That was not how it should have gone down. And it did. We've covered that, ad nauseum. But this time, I think you're going to see a bank bail-in. I've been pretty consistent with that. I think you'll see that. And when that happens, I think all bets are off. You'll see rates really rise then, because everyone's going to yank their money out in a fever pitch. And that goes back to what Kristalina Georgieva said, the head of the IMF, who said, the problem in the U.S. is the fact that people can move their money too quickly with the click of a mouse. Well, good luck this time. You see a bank bailed in and watch how fast that happens. And I think you will see a bank run like no one has ever imagined, which will immediately collapse not just one or two or three, but a lot of banks, because there are people that are thinking about this, and they just forgot and they haven't gone and done what they wanted to do. To transfer out takes some time, it takes some effort, got to open up an account at a too big to fail bank or whatever it is. And I think that will light a fuse not only under the banking system, but certainly under a lot of people's feet. As I've said before, logarithmic decay, or the game of Jenga, little by little by little by little by little by little by little, until finally it's all at once. And where are we on that curve? I don't know, but you can see even when things really aren't happening under the surface, they are happening. So not a ton to talk about. Iran bought a whole bunch of gold over the last few months, over the last 5 months, over 4 tons of gold. Saudi Arabia's exports and their treasury holdings both simultaneously have fallen to a 6-year low here in where the public is running headlong into U.S. treasuries, and China, Japan, and Saudi Arabia are dumping them. It's a little ominous that the world is dumping treasuries, but the U.S. citizens are running headlong into them. I think that's pretty much it. Let me just see if I have any other notes. Total of 23 countries have formally submitted their application for the BRICS. 22 have informally. So we will see a whole bunch more of the world sign on formally as we get closer to next year's meeting. They have come out again and said that the BRICS alliance is discussing the prospects of creating a single unit currency. Here's a new one. Russian officials recently revealed that Moscow and Tehran were considering the use of a gold-backed Persian Gulf stablecoin for oil purchases. Here again, we're seeing gold being used with blockchain. This is something that we've been talking about for 3 years now. This will happen. The Shanghai Cooperation Organization called for a gold-backed settlement currency for the entire Eurasian continent. The Russian finance minister said it will be a gold and commodity-backed BRICS settlement currency. Put it all together, why was gold reclassified Tier 1? Why are the banks buying so much? Who produces and accumulates the most? The RICS and BRICS. You keep hearing little by little by little by little. Couple more things. JP Morgan just put out a report saying that China currently holds 96% of the global copper inventories, 75% of the global aluminum inventories. Do you think it's strange that 75% of all the aluminum disappeared off the London Metals Exchange last year and 90% of the zinc? Where do you think it's going? Oh, yeah, China holds 75% of it, 70% of all the corn. What was the deal just struck between Brazil and China? Oh, yeah, that will only sell you our corn as the second largest exporter of corn in the world, Brazil is, in yuan. 54% of the global wheat supply, 30% of the global soybeans, 22% of the global crude oil. This is from JP Morgan. And this is a communist country, probably doesn't tell us everything. And so, do you see what we are running into? We are running into an organization that is using commodities, just like Zoltan Pozsar said Bretton Woods 3 would be, a system dominated by commodities. And all of the countries that are joining, like Argentina, the largest producer of natural gas in South America. And so when you talk about all of this stuff, it's becoming very, very real.
We hope you found the insights shared in this video both informative and thought-provoking. As we continue to navigate the complexities of the financial world, it's essential to stay informed and prepared for any potential shifts in the banking system. If you enjoyed this video, please like, share, and subscribe for more valuable content. And remember, in the ever-changing landscape of finance, knowledge is your most powerful asset. Stay tuned for more engaging discussions on important topics like this. Goodbye for now, and see you in the next video.